Dímelo mi gente, Marco here again, and today we're going to be doing another Ondo weekly tokenization roundup where we go and talk about all the biggest news that are happening at Ondo as well as RWAs slash crypto space. And I know this month has been horrible. November and October have not been the Uptober and Moonvember that was also promised by a lot of people, including myself. So I'm really sorry about that. Hopefully you see all these news and you see all the positive news that I'm giving you guys, and there's a little bit of hope. I do think this space is gonna continue moving up. All these amazing news that we have every single day is just really incredible, and they're even saying that institutions are going all in on tokenization, and that's what worries me, right? A lot of people in retail, or a lot of people that I know, are not getting into crypto. Well, my friends are and my family is. But a lot of people are not getting into this wave because they're scared. Everything is dropping in prices. But institutions are really getting invested in this. And when you see these big institutions get involved with this, it usually means that this is the future. So hopefully my video provides you some clarity, some hope, some hopium, whatever it may be. And if not, so be it. Please always remember to leave a like, comment, and subscribe. So without further ado, let's get right into it. As always, we have some great, amazing news, and the first one is coming from the SEC Chair Paul Atkins. That he was a keynote speaker at the Philadelphia Fed 9th Annual Fintech Conference this morning. A lot of people from the Ondo team were there that I saw. So here are some of his remarks. He says, in a free society, the rules that govern economic life should be knowable, reasoned, and appropriately constrained. When we stretch the security laws beyond their appropriate scope, when we treat every innovation as presumptively suspect, we stray from the core principle. When we recognize the limits of our authority, when we acknowledge that investment contracts can end and networks can stand on their own merits, we honor it. So, yeah, we've seen everything from the SEC to Paul Atkins to a lot of people being positive about Project Crypto, about innovation, AI, everything in general. So, there's obviously huge positive. He also goes on to say a little bit more, that he says, I focus on three areas: importance of a clear token taxonomy, how Huawei applies in a way that recognizes the fact that investment contracts can come to an end, and what could mean in practice for innovators, intermediaries, and investors. So really hopeful that this SEC is going to be, more pro everything, more pro innovation, pro crypto and everything. And it does seem like they are moving towards that. So next big news is really big. It comes from JP Morgan, and it says first bank issued USD deposits token on a public blockchain. So B2C2, Coinbase, and Mastercard have successfully completed test transactions using JPM coin via JP Morgan's US denominated deposit token, enabling near instant 24/7 settlements and real-time liquidity, as well as JP Morgan's institutional clients can now exclusively send and receive securely on Base. This is really big for Ethereum and Base and Coinbase as well. The Ethereum Layer 2 blockchain built within Coinbase, enhancing the digital payment ecosystem and encouraging further adoption. So this is really amazing. This is obviously more so for the big institutional players, but the fact that big institutions are using Coinbase, are using Base, are using crypto instead of building out their own, kind of software or blockchain or whatever is really encouraging. I really love this news, and hopefully more institutions can come into this. This is one of the, if not the biggest news that we have today. The third one is this one, and it comes from acting CFTC chair, confirms push to launch leverage spot crypto trading on regulated exchanges. And this is really big. A lot of people have lost so much money on leverage this past 2 months. Maybe this whole year. I don't really know. Maybe this whole year, this past 2 months, I feel like everyone with leverage has been literally annihilated. So the CFTC acting chair, Carolyn Pham, confirmed a report from CoinDesk that she's in talks with regulated exchanges to launch spot crypto trading, including leverage trading. And also, she is expected to be, shut down, or she's being replaced by SEC official Mike Selig, which I don't really know him. I have to study him a little bit. But she's expected to kind of stay in the field. She's expected to join MoonPay after being replaced, the report also states. So that is interesting. What I will say about this is this part right here. So leverage spot crypto trading would allow investors to borrow funds to amplify their positions in digital assets like Bitcoin and Ether, potentially multiplying both gains and losses. I like that they say losses, because that's what everyone has been doing so far. Do not use leverage unless you really know what you're doing. And 99% of you do not know what they're doing, me included. So don't do leverage. In these products, traders typically put up a portion of their total trade value as collateral, known as margin, while the exchange or broker provides financing for the remainder. For example, with 5x leverage, a trader can control 5,000 worth of Bitcoin with just 1,000 of their own capital. While such products have been widely available on offshore crypto exchanges for years, offering them on CFTC regulated platforms would bring institutional grade oversight, risk management standards, and investor protection to leverage crypto trading in the US market for the first time. So that's what's really good about this news, that the US market is finally getting this for the first time onshore and not offshore. But I will say though, please, if you are using leverage, you stop loss, use whatever mechanism there is so you don't lose as much money. Obviously, this is really great if you want to make a lot of money, but also lose a lot of money. And most of the times people, will lose a lot of money. And last big news is that Coinbase new platform brings back digital token offerings, or ICOs. The first token offer will be next week from the blockchain startup Monad. Monad is a layer 1 that I wanted to make a video today kind of explaining what Monad is, the token sale, how to find it, but I was unable to access it on my Coinbase, so I'm kind of speaking with them to see what we could do about that. But Coinbase is launching a new tokenized token sale platform with built-in protection to avoid pitfalls associated with 2017's ICO craze. Token allocations will be automated and restricted to verified users using USDC as a sole payment method. Product teams will not be able to sell their tokens for 6 months, aiming to reduce speculation and insider dumping. So, really interesting. Please read it. I'm not going to go too much into depth with this because I do want to make a video this week, kind of explaining what this is. But yeah, they say ICOs reach a peak in 2017 and 2018 when crypto projects raised billions of dollars by selling tokens directly to the public, while some products went on to develop functional networks, many collapsed or were exposed as frauds, drawing scrutiny from regulators and prompting platforms like Coinbase to steer clear of the model. And I did see Coinbase is trying to, stay away from the dumping, and Monad looks like it's a great project. I have to research it as well. So if you want me to see Monad or talk about token sale, please let me know in the comment section below. Anyways, what do you think about the news? What do you think about Ondo? Is it going up? Is it going down? I obviously think tokenization and RWA is here to stay. They're already here, so I'm really excited for that. Anyways, thank you so much for watching. Please remember to leave a like, comment, and subscribe if you're not done so already. I will see you on the next one. Bye bye.